Very soon, gold and silver are going to outperform stocks as the dollar goes into its final death throes.
Embark on an exhilarating journey into the resurgence of gold and silver, guided by Rafi Farber. Gold's relentless pursuit of all-time highs and silver's remarkable leadership weave a captivating tale in the precious metals arena. Join us as we uncover the intriguing forces behind these remarkable market movements. Stay tuned and don't miss a beat. Keep watching.
Things are getting pretty volatile. They are reminding me of in the weeks and days before the March 2020 crisis, when gold and silver were going up and down like crazy. They're doing that again, just on the reported intentions of the Fed. If silver can rise nearly 200 cents in a day, it was like $1.50, $1.70 or something. If they can do that on just intentions, imagine what they're going to do when the Fed has to cut back down to zero because there's some kind of banking crisis somewhere. And on that front, the reverse repos have not gone anywhere since November 24th. It's annoying. They should drain already so we can get this over with. Are they too good for their home at zero? Anyway, we're going to talk about silver maintaining its technical support at the 200-week moving average and maintaining the triangle since the bottom in September of 2022. We're going to look at some interesting price action in SLV specifically, not necessarily price action, but holdings action. It's really weird. I'm going to show you a chart that I put on the Endgame Investor. I found something sneaky in SLV that you should be interested in. There's still some stress in the SOFR market, the secured overnight financing market, which is really just the repo market from bank to bank. Volume is still past $1.7 trillion, where it has never been before. And finally, a very long-term chart of gold versus the S&P shows that we are at a major turning point. We're about to hit a golden cross of gold versus the S&P ratio. Those are extremely rare. They happen once every 15 to 20 years. So we have here silver holds above the 200-week moving average and its triangle. This is just a quick technical update. Sometimes it really is as simple as holding technical formation. Sometimes it isn't, but sometimes you just really got to check the really simple technical patterns here. It might be what's happening. See here that silver tests its trend line that was established here in October 2023, and it tested this 1, 2, 3, 4. This is the 5th time, and right now we're also holding above. This is from yesterday before the big surge higher. I think we're about at $24 and something. So we're substantially higher than this now. So this has been successfully tested and more substantially above the 200-week moving average, and the triangle is maintained. Just barely over here, but yes, is still maintained, and we should be heading higher from here. I don't know how high we can go until the Fed really does turn around and print more money, because we're still in a deflationary phase. But if silver can react this strongly when the Fed is still deflating the money supply, imagine what happens when they start inflating it again. It's going to go crazy. Anyway, this is a chart I shared at the Endgame Investor, and look at these little rounded rectangles here. So these blue bars are additions to the SLV holdings. And I'm going to focus in on these in the next slides, but check this out. So you have a huge addition to the SLV holdings here and the blue bar, and that is just around the time where silver had an intermediate bottom over here. This blue line is the the silver price. And no, it's the SLV price. The silver line is the silver price. They obviously move in tandem. And then you have another time here where SLV was at, looks like a yearly low here. And you have another time here where silver is at another low here, and you had huge influx of silver into the fund. Doesn't happen every time that lows coincide with big influxes of silver, but a lot of the times it does. You had one over here, a little low here, and a big influx of silver into the fund, into an intermediate high over here. And here, since I made this chart a day before the big surge higher after the Fed's announcement that the FOMC meeting where gold and silver went a little bit crazy and so did everything else, I put question marks here. Is this going to be an intermediate bottom for silver? And it turns out it looks like for now that it was. This is from a day later of the same chart, right? If we go back here, you see this is for December 12th, and this is December 13th. So look what happened on December 13th, the day of the big silver move higher. So how much silver went into the fund? 0. The big move higher was a day before. If we go back to the previous chart, the movements that are recorded on December 12th were actually made on December 11th. So let's assume there was a big move of 7.33 million ounces of silver into SLV on December 11th, reported on December 12th here. And then the big move in silver the next day on December 13th, and no move in silver on December 12th. So whoever was moving silver into the fund might have been anticipating a silver intermediate bottom yesterday. And how might that have happened? Well, I don't know for sure, but if someone is shorting the SLV, or a participating bank, an authorized participant bank is shorting SLV to redeem those baskets into the futures market and sell in the futures market, marking an intermediate bottom and then covering a short as that bottom is formed, and then putting the silver back into SLV, that could be a little bit of footsie, a little bit of manipulation. It wouldn't be that extreme. I'm not that big on complaining about manipulation in the silver market. I know it happens. I don't deny it. I just try not to get too hung up on it.
Rafi Farber warns silver stackers of potential price manipulations in a market update. Farber anticipates a thrilling resurgence of gold and silver, outperforming stocks as the dollar faces challenges. Notable is silver's strong leadership, maintaining technical support and a triangle formation since September 2022. Farber explores intriguing SLV, silver ETF, actions, hinting at potential manipulation scenarios. The discussion covers SOFR market status, reverse repos, and the Fed's impact on silver prices. Insights into LBMA chart reductions post-silver squeeze and a turning point in the gold to S&P 500 ratio suggest a bullish trend. Farber predicts the Fed's halt to rate hikes, foreseeing a swift return to zero amid a banking crisis, driving gold and silver appreciation.
Because really, what can I do? And we're waiting for the end game anyway, which will not be able to be stopped by pitsy little manipulation. The point is, if this pattern is true, and whoever is doing this to SLV is manufacturing little moves down so that they can move in, then this could be a signal that whenever there's a big move up in the SLV fund, that it could be signaling a bottom. It doesn't happen every time, so it's not a foolproof 100% indicator. But when there's big moves in the SLV ETF, big influxes of physical silver into the fund, watch out for a turning point. This is the LBMA chart from Gold Charts R Us. If you look at the LBMA website, it shows that I think they're at 845 million ounces, which translates to 26,284 tons. And if you look on Gold Charts R Us, which is a great service by Nick Laird, I recommend it. He doesn't pay me to recommend his charts, but it's pretty good. So the ETFs in London own 13,731 tons. And that means that there's 12,553 tons left to on the float. Now, how much really is that? Well, considering that we've gone from here's silver squeeze here. You see this little thing? Whoop, look at that. February 2021, and suddenly they just had a bunch of silver in there. Well, is that kosher? I don't know. Probably not, but I'm not going to make any accusations here because who am I? We went to about like 39,000 tons to now 26,000 tons. So that's about 13,000 tons that were erased from the LBMA since silver squeeze. And there's 12,553 tons left on the float. So we've already drained more than half of it in the LBMA, which is much bigger than the COMEX. Yeah, we're going the right direction. And in the end game, this is all going to disappear very quickly. And now I wanted to go into one last chart here. This is the gold to S&P 500 ratio. It means is gold outperforming or underperforming stocks? Are you sad that you don't have the S&P and you went into silver? Well, yeah, I see since 2011 that would make you sad, and it would make anyone sad that they have less dollars now because silver has underperformed the S&P 500 since the top in 2011. But there are imminent signs that this is about to reverse. There are signs that this is about to imminently reverse, and I'll show you these three circles that I jiggered here on this chart. So this downtrend goes, I think, all the way back to 1980 when the ratio was at a peak. I don't know exactly what it was, but I know the Dow to gold ratio was 1-to-1. So here, this was going down and down and down for about 20 years into 2000, which was the low. But my point here is that the red line is always above the blue line, meaning the 200-week moving average is always above the 50-week moving average when the trend is falling and falling and falling. And here you had the meeting of the lines for very temporarily, and then a continuation down into the bear market low of 1999, 2000 over here at the turn of the millennium, the fake turn of the millennium for the 2001 purists. But anyway, on the way up, right, from 2000 to 2011, you had one meeting of those lines over here in late 2005, early 2006. And then during the bull market, when silver is outperforming stocks, then you have the blue line on top of the red line, the 50-week moving average consistently on top of the 200-week moving average. Then you had a crossover here showing a new bear market for gold. Gold versus stocks. It is not silver versus stocks. It's gold versus stocks, but it also applies to silver versus stocks, generally speaking. And then here, look, the same thing that happened here, a tiny little cross, or barely a cross here, and you had this cross of the blue over the red, which turned out to be a fake out, a bull trap in 2020, and I think it was made more extreme by the lockdowns and all the insanity that was going on there and the money printing. But now it looks like we could have a more natural cross of the blue line on top of the red line, which would indicate a new bull phase, just like over here when we had this cross. They very, very rarely happen. Here, they've only happened like twice in the last 30 years, 33 years, whatever, 23 plus 10, 33, 34 years, and probably longer than that if this chart is extended back. Very, very rare. It's about to happen again. Why? Because you have the 50-week moving average at 0.46, the 200-week moving average at 0.47. When this crosses and the blue goes above the red, it could signal the real move into the bull market in gold and silver. This apparently was a fake out. It was a very frustrating one, but they don't happen very often, and I don't think this one is going to be a fake out. Very soon, gold and silver are going to outperform stocks as the dollar goes into its final death throes. In conclusion, my friends, the Fed is done hiking. There's no more hikes. We're headed down, right back down to zero. When there's another banking crisis, it's not going to be a smooth ride back down as they cut itsy bitsy little bit, 25 basis points at a time, or even 50 basis points at a time. I believe, and I could be wrong, I can always be wrong, but I believe there's going to be a crisis, and we're going to go from all the way where we are now to zero in one night, and gold and silver are going to bust a cap, or whatever the term is for just go nuts.
Thank you for joining Rafi Farber in delving into the intriguing rise of gold and silver. Stay informed about our upcoming discussions by subscribing for more valuable insights into the dynamic world of precious metals. Your engagement fuels our ongoing exploration of these fascinating market movements.